Welcome everybody to the Zaner Ag Hedge Post-World Agricultural Supply and Demand Estimate webinar here for April 11th, 2023. We'll be running through the report, the numbers, and some of the outcomes from the markets that we saw. Remember, trading futures involves risk. It is not suitable for all investors, and everything we talk about here today is just our opinions and not a direct trade recommendation. We've got going on over here at Zaner. My name's Dan Hussey. Joining me today is our Chief Market Strategist, Ted Seifried, and fellow Senior Market Strategist, Joe Nacrudo. Got these guys on the webinar with us here. A little bit about us before we get going. We were founded in 1980. We are a futures futures broker with clearing relationships with a number of clearing firms that can suit your needs. We've been an NFA member, an NIBA member, and an Illinois Farm Bureau member for the last decade running. Our services include global futures expertise, brokerage and clearing operations for those who need market access, and of course, more importantly, working with one of our brokers here for accurate risk management strategies and a risk management solution that fits what you need. So let's get down to why we're all here and take a look at some of the numbers today and from today's WASDE report, beginning with our U.S. soybean, corn, and wheat ending stock numbers. Average trade estimates here for corn, wheat, and beans pretty much in line with where the numbers came out. Wheat at 568 million bushels, corn at 1.34 billion bushels, and soybeans at 210 million bushels. Generally in line with, again, the trade estimates here. Not much of a change with the exception of our bean number there from March's report, which was expected. And hey, Ted, was there anything that stuck out to you here?
Yeah, Dan. So the carryover numbers for corn and soybeans were unchanged from last month, which was a surprise to the market because the average trade guesses were looking for both corn and soybean carryovers to go down based on the quarterly grain stocks numbers we saw 2 weeks ago. Those quarterly grain stocks numbers came in lower than expected for both corn and beans 2 weeks ago. So the trade figured that meant that ending stocks were going to shrink on this report, but they didn't. So that was a little bit of a bearish mix or bearish spin for this report. We'll get to it when we get to South American numbers, but it'd been easy for the bulls to say, okay, they didn't increase soybean exports, but that's because they didn't lower Argentina enough. But also they did. They lowered Argentina more than the trade expectations. I'll wait for you to get to it on that slide. Either way, it was a bit bearish that the USDA did not change corn and bean ending stocks. They did not lower them like the trade was expecting.
Yeah, so sometime you really had to dive down and take a look at, and see the forest from the trees here, right? You can't take these numbers at face value because while the report looks bullish, there's obviously a spin there that changed things. On the world ending stocks numbers here, wheat ending stocks coming in at 265 million metric tons. That was down from about 2 million metric tons from our last month's report and down from trade expectations. Probably the one surprise on that report, in my opinion. Corn ending stocks came in at 295 million bushels, right in line, of 0.35, but right in line with trade expectations at about 1 million metric tons lower. And soybeans with a slight increase there over month to month, and over 1.7 there, million metric tons higher than the trade guesses. Why wasn't wheat more bullish than it was? Or was it bullish at all?
The domestic number for wheat, we didn't talk about it, even though we just showed it on the slide, came in a lot higher than expected. So our domestic carryover was higher than what the trade was expecting. That was bearish. But it might be that last bearish piece of news wheat needed to hopefully try to put in a low. We'll see. It was not able to do that today. We'll see. But, as far as the global number is concerned, you say there was a bit of surprise. Well, I mean, if you can go to the next one. No,
we're back.
We're talking global. Right.
There we
World
go.
ending stocks. Hey, there we go. Our estimate was for stocks to be coming down. The trade basically had global wheat ending stocks staying the same. We were looking for them to come down. It came down a little bit more than our expectations because the USDA found a bit more demand for wheat, with the prices being a lot lower than they have been in the last not quite year and a half, or really since Russia invaded Ukraine. So a little bit more demand globally for wheat. Even though the U.S. has some bigger ending stocks, it was a very mixed report for wheat. It wasn't shockingly bullish or shockingly bearish, but you had some components of both. As far as the corn number is concerned, it didn't fall by nearly as much as I was expecting. I really thought that we would have a bit of a tighter U.S. carryover, so that's part of it. But I also thought there would be a bigger drop in Argentinian corn production. Either way, that's a very healthy carryover on a global corn balance sheet. And then finally, soybeans. Soybeans were, well, a little bit higher than expected. And that's also partially because we didn't see the big cut in U.S. ending stocks, but also the lower Argentina number was partially offset by a higher Brazil number and by a little bit less demand, which, we talked about more global demand for wheat because of lower prices. Well, we're seeing lower global demand for soybeans because of high prices.
Yeah.
And major echo. What's up with that?
It's coming off of your mic, I'm pretty sure.
I'm muted.
Yeah. Anyways, let's keep going. I'll just deal with it.
Okay, well, so South American production here was generally revised lower, right? Or at least for Argentinian production. And while that, comes off as a big bearish, or bullish, bullish number, the markets obviously have, in my opinion, priced that in. How much of that Argentinian production too can, we see further reductions of, right? Are we nearing that floor, which is, I think, a big question here. April number coming out at 37 million tons there for corn production out of Argentina. Brazil coming in at 125, right in line with last month, and a little bit lower than analyst expectations. Really, I think, generally speaking, analysts are still expecting to see Brazil knock it out of the park. And I think these numbers still show that. Argentinian production for beans coming in at 27 million tons here. That is down 6 million metric tons month over month. Ted, do you think we're getting close to a floor there?
Dan, mute your mic real quick. Okay. Yeah, so much better. All right. So yes, the big bullish highlight of this report today is that Argentinian soybean number. The USDA chose to rip the Band-Aid off once again, as they have the last few reports, by aggressively lowering the Argentina number. Now down to 27 million metric tons. That's a lot more in line with what the rest of the trade has been saying, and not just private analysts, but if you go down to if you look at the public numbers coming out of Argentina, between 25 and 27 is really kind of the range of what we've been hearing about in Argentina. So I think this either is or close to the low that we're going to see for that Argentina production number. And by ripping that Band-Aid off, again, it was a lot more friendly than what the trade was expecting at 29.5. Or actually, the trade was at 29.3. We were at 29.5, not because that's where we think that Argentina is going to end up. I don't think that's what the trade guess was either. We just kind of are more used to a USDA that does things in increments and stair steps and so on and so forth. They've not been doing that with Argentina. But now I think that 27 is probably at the lower end of where the Argentina number is going to settle down. I'd say 27 to 25. There's not a whole lot more downside risk in that Argentina number coming down, at least not in my opinion. And again, the trade looked at that as a bullish feature to the market today, but that might be a bearish feature to the market going forward, because we don't have that bullish rally cry of, oh boy, but look at Argentina. That number is going to continue to come down. It's going to continue to put a hole in global production, and it might mean more exports of either raw soybeans or soybean materials, soybean products from the United States. with that 27, with that rip the Band-Aid off number from the USDA, and the fact that the USDA did not see that as enough justification to come in and increase the US exports and decrease US ending stocks, that takes a lot of the bull argument out of the market. So I think over time, we're going to kind of change our view on how we're looking at that 27 million metric ton number from Argentina. In the meantime, they raised Brazil 1 million metric tons to 154. That was right on top of our guess and just above the average trade guess. And something I want to point out here, when you combine that 154 from Brazil and that really low 27 million metric ton from Argentina, you get 181 million metric tons of soybean production out of those two countries. We've made a big deal about how bad the Argentina crop and how big those losses are. And they're very significant. I mean, the USDA started them out at 50 million metric tons. They've lost half their crop. But the reality is that because of that Brazilian crop being a lot better than it was last year, you've got 181 million metric tons compared to last year's 174. So we are 7 million metric tons bigger. The South American crop, 7 million metric tons bigger than it was last year, despite Argentina losing half their crop. And that is pretty wild. Yeah. So, and really quickly on corn, the USDA really cut the corn number right to the analyst expert, the trade guesses. You can see our trade guess was lower. I thought they would be a bit more aggressive on corn. That's also why my global corn number was lower than the average trade guess. But they didn't do that. So unlike Argentina soybeans, I still think there's downside potential in that Argentinian corn. But the USDA, I mean, you get the feeling if they're willing to rip the Band-Aid off in soybeans, then they probably would have been able to do the same in corn. So maybe that corn number, maybe they're just feeling like it's not going to be as bad as what some people are saying. So that was a really interesting, and also I'm going to say a fairly bearish feature for the corn market in this report.
Let's real quickly, if we talk about logistics.
Unmute, Joe.
I'm unmuted. So if we could real quick talk about logistics, we were talking about earlier, folks are speaking to delays upwards of a month with some soybean shipments coming out of Brazil, not so much in the north is what you were saying earlier.
Yeah. So go back 10 years ago, the vast majority of exports that were coming out of Brazil were coming out of the southeastern corner of Brazil, the port of Paranagua. Really, that's where a lot of the exports were coming from. But in the last 5 years, especially, they've really developed what's called the northern arc in Brazil. And now that northern arc's accounting for 30 to 35% of their overall shipments. Now, these are the newer facilities. They have deeper drafts. They can fill larger vessels. And the early part of that Brazilian harvest, which was going to come from the southeast just because of where harvest starts, where earlier harvest starts, that was really backed up because they were getting too much rain, and a lot of their roads are not paved. They're dirt, but in this case, mud. So you had a big backup of trucks trying to get to the port to unload, and you had a big backup of ships waiting for those trucks to get there, waiting for that product to get to port so that they could get loaded and get sent out. That was an issue, and I think that's what's carried our U.S. export sales along a little bit further than what some of us have expected. However, now that the North is up and running and rolling, and the Mato Grosso is funneling, its massive soybean crop into those ports, you can see on a map how many ships are now making their way to Brazil. So yes, there might be some stuff that gets switched out of the southeastern ports as those backlogs kind of linger a little bit. Maybe some of that gets shifted to US, but I think more likely that gets shifted to that northern arc area. You have to feel a lot more confident that those Brazilian shipments are going to get rolling hotter and heavier in the southeastern while that northern arc continues to really rock and roll. I don't think that we have logistics or shipping delay or I don't think we have those fears, at least not like we did a few weeks ago. I think Brazil is now hitting their stride and will continue to do so going forward.
Can you speak to a time frame on Brazilian exports? So if they're exporting hot and heavy now, how long does that last? Does that leave the door open for US exports later in the season pre-harvest?
Well, Joe, with 154 million metric ton crop, and even with estimates of 7 to 10 million metric tons of that going to Argentina for Argentina's crush, I don't think that Brazil soybean exports will slow down till well after the end of our current marketing year. I really, unless something major changes geopolitically or unless something major happens that we're not foreseeing, I don't really see the market for U.S. soybean exports outside of say Mexico or your typical buyers that they're not buying out of the ports, they're buying through rail. They're different things, right? I don't think we're going to see much business with China on soybeans between now and the end of the marketing year. It's a very different scenario this year than it was last year. Last year, our beans were still a little bit cheaper than they were in Brazil at on the 11th of April. Now, this year, you've got Brazilian beans about $1.40 cheaper to go to China than the US product. So I just don't see a whole lot of soybean export sales happening between now and the end of the marketing year. And the fact of the matter is that we need to see soybean export sales in order to hit the USDA's export number that they reiterated again today. We don't have a whole lot of outstanding sales on the books, comparatively speaking. Usually this time of year, we still have a whole lot of outstanding sales that, the question is always, well, are we going to get cancellations or are we going to get to that number? If we get to that number, then we might end up beating the USDA's export estimate. Well, that is not the case this year. This year, we're basically shipping whatever we sell kind of right away, which is, you could spin that from a bullish standpoint too. But the bearish aspect of that is that, well, we're going to need to see more sales occur in order to get those shipments to happen. And with Brazil trading at such a large discount to where our soybeans are, it kind of begs the question, okay, well, where are those sales going to come from? And I don't know. I'm not sure we have an answer to that.
All right. Well, we have a couple questions here from our viewers. The first here for Ted. What levels would you enter target orders for 23 and 24, old or new crop beans? So let's just break that down. Are there any new crop levels that you'd be looking at, I guess protective wise now?
Is that question from Dave Danker?
Yes, it is.
Well, hi Dave, how's it going? Also, how come you left out the first part of that question? I thought that was the more important part of the question.
Yeah, how does Ted have both brains and charm here?
Oh, thanks, Dave. Okay, so but to the seriously part of the question, he actually says seriously. Yeah, target orders for fall. Here's the thing. When I see target orders for fall, that means in my mind, where should I be trying to sell corn before we get to fall? But here's what I'm going to say. By the time we get to fall, by the time we get into harvest, I could see that December corn contract getting down to 480 to 460. So I'm worried about downside potential in December corn. And then for November beans, I'm thinking, 1220 to 1180. So again, I see quite a lot of downside potential. My hope is that we have sort of our seasonal rally into the first half of the growing season on weather concerns. Maybe planting is going to be a bit sloppy, especially up north. And so hopefully there's some upside potential between now and then. And if there is, I think you really need to take advantage of it. For soybeans, there's a huge target just below that 1350. So, I'd have orders resting basically from 1338 all the way up to 1364, kind of layered in order to try to get more sales and hope that we get up there. I got to be honest, though, based on this report that we saw today, we're going to need some weather concern in order to do something like that. You didn't get it from this report. And then for December corn, again, you'd like to see layered sales between 578 and about 596. I would have orders resting there with the hopes that we have a weather issue to get up there. But like I said, we didn't get that help from this report. We're going to need to get it from weather. Now, the second half of that question, Dave, was for 2024. I love what you're thinking. I do think that guys should be looking to try to get 20 to 25% of 24 sold during this summer growing season. And I would be layering layering sales in from about 448 in December 24 corn all the way up to about 564. So sorry, so 548 through 564 is sort of my target area that we have on just a normal seasonal weather bump, between now and say June. By the way, for November 24 beans, I guess I should have done that, earlier, but it's basically 1272 up to 1294 is sort of the window of opportunity that I'm looking for there. So that's a great question, Dave. It's something everybody wants to talk about this time of year, although usually it's just about, new crop. We don't go into 2 years out, but I do think that's a very good time to be looking at that. So great question, Dave.
And I just want to add to Ted's idea of layering there. If you look at the charts we were throwing up there, that 55 100-day and 200-day moving average, those happen to be right at those levels, right? That'd be the reversion back to mean over the last, 100 days of price action that, makes sense to layer in sales to. Yeah. All right. We got another question here from Brian. Why such disparity in futures price for March beans versus July beans? I assume you mean May beans versus July beans here. And that really just speaks to the inversion that we've been in soybeans going into last year, right? When there's been a fear that supplies will not, be enough to meet demand. So those that need beans in the supply chain are willing to pay more for them now. And you see that, the near-term price of beans rally above deferred prices. And that's been the case for, the last almost year now. And some of those inversions, you could make a case, have gotten a little too wide. But at a 20, what is it? It looks like 26 cents wide here between May and Novi beans with the premium to the May there. That premium is being driven by short-term demand. And by the way, a roll that is going on in the May beans into into July as well. So that can be a factor here into end of life of the contract. But yeah, generally speaking, those inversions are indicative of tighter supplies.
Well, and one other thing too, Dan,
doesn't mean they can't unwind. Yep.
One other thing too, Dan, going back to what we talked about, we've got sort of abnormally low outstanding sales on the books, right? Which means that whatever sales that we've had or are getting for soybeans, they're pretty much immediately going out the door, which is why there's that higher premium that's paid to the upfront months versus July, where we don't have all these sales that are hanging out there, where we know we're going to have to source these beans and send them out. That July could really start to pick up if we continue to see export sales come onto the books. But if we're not seeing an influx of new sales come on, you worry a little bit about where that July contract goes if we don't get a weather issue.
Yeah, and a big reason why, right? It's trading at a discount. Not as confident the demand is there going into the peak summer months just yet, without a weather market, without a lot of things. So, thank you for joining us today. If there aren't any other questions here, we certainly have enjoyed hosting you for our WASDE recap webinar here with the Zaner Ag Hedge team. We provide risk management solutions, in a no one size fits all type category. And some of those strategies, oftentimes use futures when appropriate, but we will take a, more educated and sophisticated approach to market risk management when, is needed. That is, of course, the expertise that we help bring to the table. For contributors throughout the, ag spectrum in the media space, which of course you all know Ted too well from, but most importantly, we can be reached over here at Zaner at 312-277-0050. That's 312-277-0050. You can find Ted at the Ted Spread on Twitter, at Joe Nacrito for Joe, and myself at Daniel Hussey Jr. Be sure to check out our Ag Hedge chat group on Facebook. Thank you again for joining us, everybody, and we will be back with you as price action develops.
Yep. Thanks, guys. Thank you very much. And, have a great, wonderful day and be safe this week. And yeah, let us know if there's anything we do to help you out.